Picture this, a group of ordinary individuals, plucked from obscurity, and handed a simple set of rules. Fast forward a few years, and they are millionaires. Sounds like a fairy tale, doesn't it? But this is the true story of the turtle traders, who turned the financial markets into their golden goose using a trend-following strategy. Can a simple trend-following strategy that made them millions almost 40 years ago still work for you today? In today's video, we're going to put this legendary strategy to the ultimate test. We will also dive into the numbers, the cold, hard data, to see the returns this strategy has generated in recent years. So, fasten your seatbelts and get ready for a journey through the high-stakes world of trading strategies. In the 1980s, two commodity traders, Richard Dennis and William Eckhardt, made a bet. Dennis believed that traders could be taught, while Eckhardt thought otherwise. The result? The turtle trading experiment, where 23 novice traders were taught a simple trend-following strategy. Spoiler alert, they made more than $100 million. Turtle trading strategy was essentially based on Donchian Channel breakout. Turtles were given two Donchian Channel systems that took into account timeframes of 20 days and 55 days. Here's Turtle Trading System 1 in a nutshell. Enter long when the 20-day high is broken. Exit long when the 10-day low is broken. Enter short when the 20-day low is broken. Exit short when the 10-day high is broken. And in System 2, enter long when the 55-day high is broken. Exit long when the 20-day low is broken. Enter short when the 55-day low is broken. Exit short when the 20-day high is broken. But here's the million-dollar question. Does this strategy still work today? Before we move on to backtesting, let's quickly go through the code of turtle trading strategy, which is simpler than you might think. This is the code for System 1 of Turtle Traders strategy. Let's go through it. In Part 1, we declare the Pine script version used for the code and the name of the strategy, which is Turtle Trading Strategy or Donchian Channel Strategy. In Part 2, we defined important variables for Donchian strategy. The upper channel and lower channel defines both ends of Donchian channel. The functions ta.highest and ta.lowest returns the highest and lowest value for a given period of the price. Here I have defined period of 20 days because we are backtesting Turtle Traders System 1 first. When we will backtest System 2, we will simply change it to 55 days. And exit long and exit short are for our exits. Here we have defined period of 10 days as is in the case of System 1. In Part 3, we plot the upper and lower channels for Donchian channel. It is optional, but it gives us much clearer picture of our entries. In Part 4, we define conditions for our entries. And in Part 5, we define conditions for our exits. Now, let's get to the most interesting part. Backtesting. First we will begin backtest System 1, and then move to System 2. Open TradingView and let's start with testing it on Apple stock. Just type AAPL and select Apple. The time frame selected is daily. Open Pine Editor. Click Open. Then click Strategy. Select and delete the boilerplate code. Paste the code you copied from description. Save it. Then click on Add to Chart. The profit is really small. But that's because our position size is set to 1 contract. Let's change it to percentage of equity. For the sake of experimenting, let's set it to 100%. Boom! 12,636% in 301 trades. This is almost same as in our ChatGPT video. Max drawdown of 71% is bad. Return of 12,000% or 120 times is awesome. But the drawdown is the big problem, which is why turtle trading was so difficult. Most people cannot handle such big drawdowns. It requires immense disciple and willpower to go through such drawdowns. Keep in mind that we are backtesting on a daily time frame. This is not intraday but swing trading. Now let's try to switch to intraday timeframes and see what happens. Let's switch to 15-minute time frame. We get return of minus 5.76% in 176 trades, which is terrible. Let's try 5 minutes time frame. 0% in 126 trades. Let's just say that turtle trading strategy is not for intraday trading. But it's great for swing trading, with daily time frame. Now let's try it on a different stock, say Amazon. minus 68% in 207 trades. With a drawdown of 98.74%, it's a complete capital wipeout. No one should use Donchian Channel Strategy on Amazon stock. Now, let's switch to Tesla. 381% in 99 trades, which is great. But, the drawdown is still 75%, which could be unbearable for majority of the people. Turtle traders were commodity traders. Let's try their strategy on some commodity. Let's switch to gold. Whoa, 612% in 444 trades, that's incredible. So this strategy does work in commodities also. Let's switch some other commodity, say copper. We get 192% in 192 trades, which is again good, but not good as what we got in gold. Let's go back to what we are interested in, stocks. Let's try Microsoft stock this time. It gives 204% in 270 trades, with a drawdown of 70%. Let's try Google stock also. Minus 32% in 163 trades, with 76% drawdown. Before we move on to Backtesting System 2, please show your support by subscribing to the channel and hitting the like button. It gives me a lot of encouragement to create better videos. Thanks. Okay. Now let's switch to Turtle Trading Strategy System 2. To do this, we'll simply change 20 to 55 and 10 to 20 in our strategy code. Now remove the previously plotted strategy. Then, click Add to Chart. Now change the order size to percentage of equity, then click OK. Minus 32% change to plus 12% on Google chart, which is a good sign. The number of trades dropped from 163 to 68, which was expected because now our Donchian channel has got bigger. Let's see Tesla. Minus 92% return and a drawdown of 95%. In other words, account blown. System 2 failed on Tesla. Let's switch back to where we started, Apple. We get 2,387% in 146 trades. All trend-following strategies seem to work very well on Apple stock. Let's switch back to Microsoft. 53% in 126 trades, which is an average result. For more backtests, I'll leave the code in description. You can copy it from there and test it on any stock or any time frame that you want. As you guys saw, like most other strategies, Turtle Trader's strategy didn't always work. Sometimes it failed, sometimes it gave average results, but sometimes it produced extraordinary results. Even when it did work, it had huge drawdowns of 70 to 75%, which is why turtle trading required extreme discipline. For turtles, trading wasn't just about the strategy, but also about sticking to it under all circumstances. To know more about how turtle traders were trained and how they traded, watch this video. Please subscribe to the channel and leave a like. Comment down, what do you think about the results? Thanks for watching and I will see you in the next one.